Good morning.
Good morning.
And
We
good
made
morning.
it.
Good morning to you all. This is one of Next Step Partners webinars, podcast, however you want to call it, which are intended to educate and display the areas where we live and the opportunities. Today, I am fortunate to have David Baca from Guaranteed Rate Affinity here. I met David, a few months ago, and I was very impressed with not only his knowledge of reverse mortgages, which is what our title is, but also the way he cares about his clients. So with that, David, tell us something about yourself.
Thanks. Been in business for about 40 years. For the most part, ever since college, all I've done is banking and mortgage. So a few decades of depth there. And on a personal level, married. Our daughter lives in the Washington, D.C. area. So we're near to her. And we've enjoyed living in the area. So,
Good. Well, let's get into it. As you all know, I concentrate on those people who are approaching retirement and those people that are retired. And the reverse mortgage has always been a tool that I have thought a lot of in the right case. And but now I want David to tell us a little bit about the product as it is now, and maybe how the opportunities of how you can use the tool for your best intentions, interests. So David, what's the deal with reverse mortgages?
I like to refer to a reverse mortgage as equity access because there is a considerable amount of equity out there. And to be open, there's probably less cash flow, income from Social Security, pension, other retirement vehicles than we might have otherwise hoped for.
Yes.
So, I personally can speak to this. I have Social Security, my wife has Social Security, we have an annuity, and when we add that up at the end of the day, there might be a few months where our outflow is a little bit more than our inflow. And there might be some months where our outflow is a lot more than our inflow.
I wouldn't know anything about that.
So, but like a lot of people, we do have a ton of equity, and equity can be converted into a useful tool to help with cash flow and other funding items, especially as we want to stay in our homes. So, and a reverse mortgage is very helpful for that.
I think so. Especially, I love the way he phrased some of us have more money going out than coming in certain months or many months. It's a tool, if it fits your needs financially, that can make an amazing difference in your life, in my opinion. So how does it work?
Sure. So it can do any number of different things. So let's kind of try to list them out here. Probably the first thing that we might think of is it can help us reduce our cash flow by paying off our current mortgage. We replace the current mortgage with a reverse mortgage, and now we're no longer paying principal and interest on a mortgage. It is being added to the mortgage, so your mortgage balance is going up. Presumably the value of your home is going up, and they're working together to make your cash flow better. So in this example, we're reducing cash outflow. Another thing that we can do with the reverse mortgage is get cash. So let's say we've got some improvements to do to our house. Last year we did the roof and we replaced our wood siding with vinyl siding for a little bit longer term, right? And the cash from a reverse mortgage could have helped fund that if it was needed. The other thing that's really interesting is you can also set up a line of credit with the reverse mortgage.
Yes.
So if you don't have a cash need today, you can put this line of credit in place for the future. And we can also, of course, create a monthly income stream. So I hope you're getting the idea that it's rather flexible and can do many different things.
A lot of clients I help are older, and they find themselves in a situation where they have very low cash flow, but as David said, they have a lot of equity in their house, and the reverse mortgage can be a lifesaver in that case. It can allow them to do something that there's literally no other way they can do. Are there any disadvantages to the reverse mortgage?
There's probably the two most prominent items that somebody will mention is that the mortgage balance is going up because you're not making a payment anymore. That's getting added to the mortgage. So you're using your equity, and that can be perceived as a disadvantage because your mortgage balance is going up. Then there are some costs to the reverse mortgage that are greater than other loan programs. One is the mortgage insurance premium that you pay up front. The benefit of that insurance is that it allows you to stay in your house for life with this program and never being responsible for paying it off. And your heirs aren't responsible for paying it off, even if the balance of the reverse mortgage becomes greater than the value of the house. So expense has a purpose, and those are the two most common items that would pop up.
It used to be that there were concerns about reverse mortgages, one of which was that the interest rate was substantially higher than a traditional mortgage. Is that still the case?
That is not the case. If we look at the interest rate today for a reverse mortgage, and we look at the interest rate today for a standard conventional conforming loan from Fannie Mae or Freddie Mac, they are almost exactly the same.
That's good. That's good. And you mentioned this, you touched upon this. There was rightfully a concern in the early days that if a couple gets a mortgage and one spouse dies, that the surviving spouse has to sell the house. That's no longer the case, correct?
That is not the case. So, first of all, you still own the house. This is no different than any other mortgage in that you own the asset. There is a mortgage, there is a lien, but you still own your house. And then especially if you have a younger spouse that may survive you, the program is set up specifically for them to be able to stay in the house.
Good. I mean, it's really difficult for a couple to think about getting a reverse mortgage if that was not the case.
We go to great lengths nowadays to provide some safety features in the program, one of which is counseling. If you're going to apply for a reverse mortgage, before you do that, you'll go through a counseling session with an independent counselor, not me. And that counseling would last for about an hour to 90 minutes, and they'll walk you through all of the things that I have talked with you about before that, but now you're getting an independent third party to say, yes, what he said is true.
That's great. That's great. There was a question bouncing around in my head that I got to bring back. Anything else to fill space?
Yeah, sure. You'll hear us, I want to go back to this idea that you'll hear us talk. Why don't you go ahead, if it's there.
Oh, all right. Sorry about that. There are certain expenses related to home ownership that you still have to pay, even with a reverse mortgage. And those are, I believe, you have to pay your taxes.
Yes.
And you have to pay any homeowner's cost you have, and insurance. Is that correct?
That is very, very true. Although with the right amount of equity and age, there may be the opportunity to cover those other housing expenses.
Oh, really?
It doesn't happen very often, but it is a feature in the program, and it could be available.
Okay.
Yeah.
Excellent. You were going to say a little more.
I want to go back to the idea that your heirs are not going to have to come up with whatever the mortgage is. We call this a non-recourse loan, which means that, again, want to emphasize that if for some reason the mortgage balance gets above the value, nobody is responsible for that other than the lender, and that's what the insurance does. So you
Yeah.
own your home, but you're not responsible for that difference.
Can you I mean, the interest rates now are higher than they used to be, obviously, we all know that. Can you refinance a reverse mortgage?
Yes, you can, and in fact, we are probably entering a period where there's a reasonable expectation that rates may trend lower.
Yeah.
I'd say they're stable to declining right now. And so over time, you can refinance a reverse mortgage, and you'll actually probably do better as time goes on in refinancing, because you're getting older and you're probably building up equity. The two main items in qualifying for the amount that we can create.
When you talk about increasing equity, it's something I talk to all my clients about. The real estate valuation compared to the stock market, real estate over a 30-year period has surpassed the stock market. So there's no guarantee that's going to happen in the future, but it has, and that hopefully will offset the increasing mortgage amount by the increasing value of the house you're living in.
Yeah, I think there's one other thing that we want to address, and that is qualifying for a reverse mortgage, right? Because this is different. A traditional loan is going to look at your debt to income ratio. A reverse mortgage doesn't do that. The qualifying items are your age, got to be over 62, that it's your primary residence, and we are going to look at your credit history for your housing obligations. We have to prove that if you have a mortgage, you've paid it on time over the last 12 months, your real estate taxes, insurance, HOA dues, they've all been paid on time over the last 12 months. And then one item that I do want to mention, if your spouse is younger than 62, you can still get a reverse mortgage if you're over 62. So the program has a way to help that have that happen for you, so that your spouse remains protected.
Yeah, this may be a little too complicated for this setting, but the amount you can get as a reverse mortgage depends upon the age of you and your spouse. The older you are, the more you can get. Is that correct?
Absolutely.
And then there's a base if you're just 62 that it would start out. David can tell you more about that.
Thank you.
Yeah.
Yeah.
Any other thoughts?
I think we've covered a good bit of items to get us started.
Yeah.
We're always available. Both Gary and I are always available to answer any questions about this. We're both very well versed at this, so I think we would be happy to entertain any questions at all.
Your contact information will be at the end of the video, but why don't you tell them what your contact information is, telephone number and so forth.
Sure. I'm David Baca. My best number to reach me is my cell phone, 410-302-3620, and my email address is david.baca@grarate.com.
Thank you.
You're welcome.
I'll close. Again, Gary Haynes from Next Step Partners. Next Step Real Estate Partners is part of that. We serve I'll call it over 55 market with real estate, obviously. That's what we're here for. Safety products for the home, for when somebody's living at home alone and those darn kids are just concerned about that and want you to move somewhere. And then we act as a repository for professional referrals, where you need something for your home, you can go to Next Step Partners, and it's likely you can find it there. So, Gary Haynes, I'll give you my phone number, 443-534-6124. Gary Haynes at Next Step Partners, that's plural, nextsteppartners.org. Thanks for watching.